And we are live 1 minute after the stated time. Apologies, people. Welcome, everyone. Welcome back to NFA Live, episode number 30, if I'm not mistaken. Here we are again. Apologies for last week's hiatus. I was back in the UK. I think Ben and Rob were both busy as well. So we're back today. We've got plenty to talk about. I am, of course, joined by Rob from Digital Asset News. Welcome, Rob.
Hello, everybody.
And by Ben from Into the Cryptoverse. Welcome, Ben.
Hey, thanks for having me.
Good to see you again, chaps. It feels like a long time. It's been, what, a fortnight, but it feels longer. How are we both doing?
How's Ben doing after that monster vacation with all the kids?
I need a vacation from it, that's for sure.
Mm-hmm.
Yeah, I think I'm doing pretty well. It's nice to just not. The price of Bitcoin was 29.3 when I went out of town, and I got back. It was still 29.3, and I'm like, all right, well, it's nice for the altcoin reckoning to go on pause while I was on vacation. I don't want to miss it.
Perfect timing, man. Perfect timing.
Imagine it happening. Everyone go, "Where is Ben? Where is Ben?
Yeah.
He needs to be here. He needs to see this."
Yeah. I mean, it's interesting, but yeah, I mean, the price hasn't really moved for. I mean, even today, even with Bitcoin at 28K, I mean, it's still relatively the same price action for what 4 or 5 months now.
Mm-hmm.
Yeah. Rob, I liked the X or tweet or whatever you posted the other day, where it was just you sort of floating by in that green screen swimming pool of yours.
It's difficult. It's difficult to make
price
that
action.
Work. Yeah, it's difficult to make that work. You need a team of visual effects to make that happen. But yeah, there's nothing really going on. Just time to, if you're going to DCA, this is not a bad time. But we'll see what happens in Q1 or Q4 and Q1 coming up. That's the big question.
Yeah, absolutely. But this is nonetheless a good time to be paying attention. I think a good time to have your eye on the markets, keeping an eye on narratives. I mean, there is kind of action happening out there, isn't there? You know, coins, tokens, especially, are still sort of pumping every now and again. Sometimes sort of individual ones. Sometimes the market itself will sort of lift a bit. But it's still kind of interesting to kind of watch that happen and go, oh, I wonder why that's just pumped 500% or whatever. But yeah, it's nonetheless still a good time to be paying attention. So well done to everyone watching us today, and well done for still being in the mix. It'll all pay off further down the line. Okay, to say nothing, of course, that you'll of the enjoyment that you'll get from watching today's show. On which note, let's crack on. And oh yes, before I do crack on with the first topic of discussion, can I just ask folks watching, if you have any questions for Ben, Rob, and myself, can you put them in the comments, and I'll select a few as we go along. And then once we get towards the sort of end of the show, once we kind of gone through those talking points, then we'll try and answer a few of those questions for you. But let's crack on with the first thing that I wanted to talk about, and that is Grayscale, specifically Grayscale's lawsuit against the SEC, which is the rumors are that we might be about to find out which way that's gone, possibly even this week, if rumors are to be believed. Obviously, this is Grayscale sued the SEC because it wants to turn GBTC into an ETF. Obviously, ETFs have been very much in the headlines recently. So, assuming that we do get some sort of ruling in that case, what do you guys think that ruling? Let's go with what the sentiment seems to think. Bloomberg Intelligence suggests that there's a 70% chance of Grayscale winning this, and I should also note that Grayscale has just tweeted, just shared a tweet for a job posting. For senior associate ETFs. So it's looking to hire. Let me see if I can get that job posting up for you, because it's an interesting one. Yeah,
maybe they know something we don't.
Well, that was kind of what I was thinking. So there we are, senior associate ETFs. at Grayscale Investments. So if anyone's plotting a change of career, that could be an option for you folks. So yes. So Rob, let's start with you, if I may. Let's assume that Grayscale does win this case. What effect, if any, do you think that'll have on the market?
No, I think obviously it'll be a little bit tougher for the SEC to prove their point that the problems that they have is surveillance, because that was their big issue with this Grayscale lawsuit. Switching over was surveillance and manipulation. So if it comes through and they do actually win, let's hope they do, then it'd be very difficult for them to prove in their other cases when they're trying to approve these spot ETFs that the big problem is surveillance and we don't really know for sure. So let's hope it actually happens, and we'll go from there. Although I will say, now everybody knows my position on the ETFs, and man, I hope I'm wrong, and I'm in the minority. I understand. So I mean, we'll see what happens. But when I was taking a look at just the past and what the SEC is actually saying in this case, there was an article from Reuters, and they came out and they said that, of course, the big issue was Grayscale's argument is that the regulatory previously approved certain surveillance agreements to prevent fraud in the Bitcoin futures ETFs. That's why it got approved. And that's why they shot down, or they delayed the other ones, because there wasn't enough as far as surveillance. That's why they brought in Coinbase to custodianship and also have surveillance. And in this case right now, and if they win, great, but the senior counsel for the SEC, Emily Parisi, the argument is that she states, and don't shoot the messenger, this is what she states. She says that the regulator lacks data to determine whether those surveillance agreements could also pick up potential fraud manipulation in the spot market. And she states the evidence is just mixed at this point. It's bidirectional sometimes, knowing that Bitcoin futures have only been trading since 2017. So if they win this case, I mean, like I said, great, but I think they could still say, well, there's an issue with the surveillance, and we'll go from there. But again, I'll just leave it like this. If the spot ETF comes through or not, if it doesn't, the narrative's still there. BlackRock, the biggest manager out there with $9 trillion in assets under management, said, we're going to give this the green light. So the narrative is in place. We've done just fine without a spot ETF so far. And I still see a massive bull run in 2024, 2025.
That's good. That's what we want to hear. Ben, can I sort of flip the question on its head a little bit and just ask you, like, let's assume for the minute that that Grayscale loses against the SEC. What effect do you think that would have? Is that something that you think has already been priced in? Would it be really, really bad, or do you think it's just be another kind of bump in the road?
So I would say that, I mean, there is that job posting that you posted. I also think that the market is a pretty good gauge as to, whether it's going to be allowed to be converted to a spot ETF or not. And right now, at least according to what I'm looking at, the premium on GBTC is still negative 27%. So clearly, if it was if it were a sure thing, then that I imagine that gap would have closed up quite a bit. So definitely, I think in terms of like, will it get approved or will it not get approved? I would more so defer to Rob. I think Rob has had a pretty good track record on this. It has been a very pessimistic view, but I mean, hey, like, it's been the correct view, and that's what's mattered for a long time. I think that if it does get rejected, I don't really think it's that big of a deal. That doesn't mean that the price won't go down. I think price could go down just because of more seasonality effects related to Bitcoin, and if it does get rejected, and the price of Bitcoin does go down, I think that would be the narrative behind it, right? That would be the narrative behind it. But I don't really think it would make that much of a difference, right? Bitcoin went to 69K without a spot ETF in the United States, right? So that can't be the only reason that would make Bitcoin, go up or go down. I do think eventually we will have a spot ETF. My guess is that it could be next year. Before it actually happens, but I guess we'll have to wait and see. But to answer your question, I don't really think it's going to have a huge impact on the price. If it gets approved, then you might see some renewed interest in Bitcoin in Q4 or something. If you look back at prior pre-halving years, even in 2015, Bitcoin dropped 50% in August, actually, and then it rallied into the end of the year, right? So you could still get good price action later on in, say, Q4 if it gets approved. But who knows what happens between now and when the first spot ETF gets approved? And I don't know. I mean, I know there's all sorts of deadlines for all these different things, but I believe for a lot of them they have multiple deadlines
Yes.
on when they could actually get approved or not. And for all we know, the SEC is going to kick the can down the road beyond into 2024.
Well,
I mean, you timed it absolutely perfectly there, Ben, because there was an article, on Cointelegraph just a couple of days ago. I think it should be up on the screen now. Delays set deadlines for Bitcoin ETF approval to early 2024. So it certainly looks like the SEC they're past masters of kind of kicking this can down the road, aren't they? So yeah, it seems to be something we probably shouldn't get too excited about at this stage.
Yeah, I mean, I think it's just, it's there in the background. There's always going to be something to talk about. But at the end of the day, Bitcoin does not need a spot ETF to do well in the end, right? I mean, obviously, if we go back into a risk on environment and post halving and whatnot, clearly, if you have a spot ETF, it would lead to more money coming in into Bitcoin. But I don't really think it's a make or break moment for Bitcoin.
Yeah,
No,
agreed. I think it's fair to say, Rob, do you think, I mean, this is certainly, though, it certainly be a make or break moment for Grayscale, this case. Do you think, I mean, I really think this seems like something that Grayscale really has to win, not only because of that GBTC discount that Ben was talking about, but also obviously Grayscale and the kind of wider problems at DCG. So this is kind of really big for Grayscale. Do you think?
No, I know. Well, yeah, because I mean, it's amazing to me how like when everything's bullish, it seems like all those past sins just get forgiven and no one really realizes what's happening. And it's like, well, there's money coming in, so no big deal. So the issue that they have with Gemini and DCG and the potential lawsuit that's going on there, if they get this approved, then of course, just like what Ben talked about with that premium being the negative, now they can go to a spot ETF. Now the money flow comes in, all of a sudden everything's okay. So yeah, I think that they would definitely like this to actually happen and move forward. And Guy, I'm glad you showed that article because Simon Dixon actually tagged me on Twitter for that one, and he's like, well, he said, it looks like there's a little bit bumpy road or something, and of course we have a bet for that T-shirt, but when I saw that, I was like, I don't know if that's true. So I guess they really are going to push everything back 2024. Interesting.
Yeah, I mean, they've kind of got history, the SEC, of doing that, haven't they? Because I think when the last time spot ETFs for Bitcoin were on the table, everyone got kind of similarly excited, and then the SEC just delayed it, as I remember, for as long as was pretty much humanly possible. Yeah. So I see no reason to expect why they wouldn't do the same thing this time around.
Hey, it's a delay and it's not a no. So good thing could still happen. All right.
Yeah. Normal service will be resumed. Okay, let's move on and talk about somewhere where kind of normal service is struggling to resume a bit, and that is China. So China is having a bit of a rough ride at the moment. It's kind of we were all expecting it to kind of come roaring back after it dropped zero COVID and kind of to bounce right back. Consumer spending was supposed to skyrocket. Chinese tourists were supposed to kind of flock all over the world. Output was supposed to go up. It hasn't really happened. China is really struggling, and I think people might have spotted that headline the other day that they've actually decided to stop publishing youth unemployment figures now, which suggests that and youth unemployment was already pretty damn high. So China is having a tough time of it. It's not alone, of course. But my question is, China might look to kind of get out of this hole the way that most governments would do, and that's to start stimulating. So could that potentially be, if China decides to do that, could that potentially be a good thing for crypto? And obviously that's in the context of Hong Kong kind of being opened up a little bit more. I think they have now started approving some exchanges there in Hong Kong to trade crypto. So could the Chinese stimulus be potentially good for crypto? Ben, do you have a particular say on that?
Yeah, I just shared my screen. I don't know if you can pull that up or not. But yeah, I mean, in general, I think the idea behind crypto is that it really moves on excess liquidity, right? If you put a lot of liquidity in the system, it likes to seek out those higher risk assets. And I mean, this chart basically just shows net liquidity. So it's an approximation of global net liquidity, and it actually includes China. And one of the reasons why net liquidity back over here in September through January, one of the reasons it went up so much, it wasn't because of the Fed. We know the Fed was actually reducing the size of their balance sheet back then. If we just sort of overlay, see if I can just overlay here, total assets by the Federal Reserve, we know that they were actually reducing the size of their balance sheet, right? So you can see that the Fed was reducing the size of their balance sheet, but somehow net liquidity was going up. One of the reasons net liquidity was going up was because the dollar was going down. And if you denominate the liquidity of those central banks in US dollars, obviously the purchasing power of USD then went up if the dollar that was devalued against those local currencies. But the bigger thing that caused this to go up was also the fact that the East, so you had China and Japan, really expanding their balance sheets. And again, you can see that net liquidity went up, and so too did the altcoin market, right? And then net liquidity went down, and so too did the altcoin market. So my expectation is that if there were to be some form of printing, it would be a good thing for crypto. The only question is does it overcome all the QT going on everywhere else, right? So like in Q4, you had China and Japan printing, and because the dollar was also dropping, it led to an increase in global net liquidity. If today we have China printing, if China starts to print a lot again, but if everywhere else is reducing the size of the balance sheet, or if the dollar's going up, then it might not be enough to make a difference for the altcoin market. So it depends on what other central banks are doing, and it also depends on the dollar. But in general, increasing liquidity is good for crypto.
Yeah. Rob, are you buying into this Chinese narrative at all? You know, the fact that that there is now increasing access for Chinese citizens. Do you think that's something that is going to have any kind of noticeable effect in the near future, or do you think that's kind of a little bit overblown?
I mean, we just took a look at it, right? When there's more liquidity, of course, it just rallies into some kind of risky assets and crypto markets, but that's everything. So I think it can, but I think the bigger question is how bad is China actually doing, especially with the issue that they have with their real estate and the collapse over there. I remember Ray Dalio would always talk about how China was going to take over and it was going to be the next global power. And now it just seems like there's all these problems that are happening over there. I mean, look, remember a couple of years ago, Evergrande, where they were building all these ghost cities and these high rises and these real estate places, and they collapsed and everybody thought it was going to be awful. But then, you know, as we move forward, they just print more money, and they lost, you know, $80 to $100 billion, and that's just Evergrande itself. So I just wonder to myself, like, how long can you keep printing your way out of this? I mean, look, they print, we print, our M2 money supply. I mean, we've gone up into the right and we've decreased, just like Ben talked about, as of just like last year. I mean, our debt itself we're at 32 trillion. Our debt to GDP is 118%, but China debt to GDP is 282%. And I don't know how sustainable that actually is. And we can see that it's just, who knows? It's a country of contrarianism. And I don't know what's going to happen with the buyers in China. And I find this odd that Chinese citizens are not supposed to be able to buy crypto, but yet, as far as Binance, it was like $90 billion of their market share of who was buying it. And all they're doing is using VPNs, and they're getting away around the KYC procedures. So if China is somewhat allowing this because there's liquidity, and they can actually do it and use Binance, even though they're not supposed to be doing that. I think it's fine so far, but I remember you put out it was an image of like a Chinese man who was sentenced to 9 months for buying USDT. So I don't know.
Yeah.
I don't know again how long this charade's going to keep going. And it seems like China really is propping up a lot of different things. I'm just worried about moving forward, and are they going to start to crack down, especially with the central banks and them saying, hey, we don't want this. And there's a big difference again between Hong Kong and China. Hong Kong, 7 million people, China 1.6 billion or something like that. And it's a totally different. It's two parties, two countries, one system or something. Something I always get confused. But
one country, two systems.
One country, two systems. That's it. And we'll see how it plays out. But I just concern myself. I'm looking at that. I'm like, can they sustain this, or is everybody's going to keep printing to oblivion? I know it's okay for America. That's what we do. But who knows how it'll work out in China?
It's one rule for America and a different rule for everyone else. But it's interesting. It'll be interesting to see how that pans out. And of course, China itself has got loans out all over the place, hasn't it? I mean, this kind of Belt and Road Initiative, which has built a whole load of infrastructure sort of all over Central Asia and Africa. That's all loans. And I guess if China is struggling, is it going to pull those loans in? Is that going to have a kind of domino effect elsewhere? So yeah, it's one to keep an eye on. I think what's happening in China. That said, I mean, China is its latest results said it is still growing. It's just not growing by its previous standards. I think kind of before, not so long ago, 10% a year was considered par for the course, and now I think the latest figures were sort of more 3%, which I mean is still it's still growth, isn't it? But obviously China, as you say, Rob, China is it's a kind of hard place to get your head around.
No, it is. And then there was this good video by Ben Shapiro, and he talked about one of the big issues is usually like the structure of countries should be the younger generation will be on the bottom as far as the amount of people that are there, and then it kind of pyramids up to the older people. Unfortunately, with China, what they did was that the one child policy from 1980 to 2014 or 15, they are now kind of like middle heavy, top heavy, 35 to 55-year-olds, and it's only increasing. So they don't have a younger generation to kind of come in, and I think that's going to be a big undoing. But I mean, this is just I'm not a Chinese expert, obviously. This is just things that I read and concern myself with. Yeah.
The whole question of demographics is fascinating. I think I've mentioned that before. Anyhow, we mustn't stray too far off the topic of crypto, which is what people are here for. So let's move on. Thanks for that, gents. Let's talk about. So recently, we saw some layoffs from CoinDesk. So my question regarding this is, and I mean, CoinDesk isn't the only one, and we've seen plenty of layoffs previously in this bear market. But my question is, are these recent layoffs, are they a signal perhaps that we've got further to fall from here? Or is this just kind of par for the course at a time like this? Obviously, CoinDesk is in a kind of unique situation because of everything that's happening with DCG. But Ben, what do you think on this? What are your thoughts?
Yeah, I mean, like we've seen layoffs at a lot of different companies over the last year or so, but initial claims and continued claims are still relatively low. So, I mean, look, we have an inverted yield curve. So normally that means we're likely going to end the cycle with a recession. It's just a matter of when that actually occurs. That's the difficult part to predict, right? I mean, the Atlanta Fed right now is even predicting Q3 annualized GDP to be over 5.8% or something crazy, which is probably a bit too optimistic. I don't really think that that specifically is the reason why crypto would fall. Again, as I said earlier, I think it's more so to do with excess liquidity, and I also think that it's one of the reasons why crypto can often bottom out before the stock market does, because crypto will likely start to do well the minute liquidity is pushed back into the system, where for stocks, it can take longer to bottom out just because they're dependent on more than just liquidity, right? There's a divergence on stocks and liquidity more so than there is in, say, like the altcoin market and liquidity. So yeah, I mean, I definitely think the altcoin market likely has further to fall for sure, and likely Bitcoin as well is my guess. I don't know that, CoinDesk laying people off is the reason for that. I mean, I think it's more of a cyclical thing than anything else, and I think a lot of it is due to, the seasonal correction we're getting in the S&P. I mean, the S&P is down 4% in August alone, and normally what happens in Q3 of the pre-election year for stocks is that you see the S&P correct down at least to that 20-week moving average, and the 20-week SMA for the S&P 500 at this point is currently at around 4,300. So we're currently at 4,400 on the S&P. The 20-week SMA is actually closer to 4,300. The issue with that is that Bitcoin is already below the 20-week moving average right now. So if the S&P continues this seasonal correction, then that's what normally knocks crypto into that late pre-halving year downtrend, because it got knocked below the 20-week SMA while the S&P was just having a seasonal correction. I mean, like, I think there's a chance that we could go into a recession, soon. But when you just look at initial claims, when you look at continued claims, when you look at the unemployment rate, it still would make you believe that it still could be several months away.
Yeah. Rob, what are your thoughts in particular regarding these layoffs from CoinDesk, which is obviously kind of a signal of perhaps what's going on in the crypto industry. But do you agree with Ben? Do you think we've still got further to fall from here potentially?
I don't know. I don't know, but I will say, like, it's pretty doom and gloom right now, for what people have just been listening to. Sorry about everybody. It's not that awful. When I hear about these stories about people laying off, like, I mean, in business, I've had to hire and fire people. It's just a normal cycle. And in all honesty, you get too top heavy at some point, and you got to get rid. Unfortunately, at some point, you have to start to lay off people to get lean, so you can skyrocket, moving into the next whatever it is, whatever endeavor that your business is going to. So, like, right now, when I see like layoffs, I mean, CoinDesk is a little bit different, but you also see, like, I know Binance had a pretty big layoff not too long ago, and I've heard of other layoffs happening in different projects. This is just normal, and this is what has to happen for us to kind of consolidate, so we can take off for the next bull run. So I was kind of waiting for this and going, when the hell are they going to start laying people off? And now here we are. So, and then to speak to Ben's point about the recession, yeah, the yield curve is pretty steep right now. I covered this yesterday, and we can take a look at, there's credit card debt is almost at $1 trillion, I think. And we're looking at delinquencies actually going up. So we know there's going to be a problem coming, but these are the same things that happen over and over again. So we should all kind of be used to it and be ready for it. We can't stop the actual events. The only thing that we can change is how we react to them. So right now, you watching the video, it's up to you to determine, like, should I be saving a little bit here, or should I be investing a little bit here? But we know what's going to happen, so just be ready for it. And it's just a normal cycle of the financial process, in my opinion.
Yeah. It's like the saying goes, isn't it? There's no such thing as bad weather, just inadequate clothing. So I guess we know that there's likely to be bad weather on the horizon, so to speak. So it's about, as you say, Rob, it's about being prepared, being forewarned is forearmed.
Yeah.
Okay. Let's look ahead then. Let's assume that the time will eventually come to start buying altcoins again. Probably not for a while, I think is the consensus among us three. So let's not get too carried away with it. But I'm just curious to know what kind of factors you'd be looking for when deciding what to buy, and how you might look to structure an alt portfolio in the coming months or years, whenever you do decide to start getting back in. Rob, I know that you've been DCAing a bit already, but I'm just curious to kind of look ahead to when alt buying season might begin. So, Ben, is there any particular factor fundamental that you'll be looking for when starting to accumulate alts, when that glorious day finally comes?
So I just shared my screen, so maybe you could show that. So I'd be looking for the altcoin market to reach around 25% of Bitcoin's market cap You can see that it tends to peak out here at parity with Bitcoin's market cap, where you can see where it goes to 1, and then it's bottomed out here at around 25% of Bitcoin's market cap. Right now, it's at 46% of Bitcoin's market cap. And I mean, you would have to basically get about a 40%, 40 to 50% drop here on alt Bitcoin pairs collectively to see us go back down to that level. There's no guarantee that we do, but that's what I would be looking for. Specifically, what I would look for the altcoin market is how are they performing on their Bitcoin pairs, because that usually tells you if it's an altcoin worth buying or not. Now, just because they bottom out on their Bitcoin pairs doesn't mean they have to go put in new highs. There's always a chance that the project gets rugged, or there's some exploit on it that no one's thinking about, or maybe the main project developer, or maybe the main dev like leaves or something. Right? There's no way to predict any of that stuff, and that's why Bitcoin is still going to be the safer play. And a lot of times, a lot of alts can bleed against Bitcoin, even in Bitcoin's, even in a parabolic rally by Bitcoin to do all-time highs, right? And so there's this idea that you could just buy Bitcoin until Bitcoin hits new highs. That's more of the safer approach. But I'd be looking out for something like that. Like, look at last cycle. You can see that ETH Bitcoin really bottomed out here. You had a low in September and then a double bottom in December. And then what happened with ETH USD? Right, we know that ETH USD after that happened, it went on and went about 3 times the prior all-time high. Right, now look at a different one. Look at ADA Bitcoin. You can see that in Q3 of 2019 and early 2020, it was finding these lows and it was finding support at those lows. And if you zoom in, you'll see that there was a lot of demand. Right, like these were just wicks down here, and it was the fact that ADA held those lows that informed me that it would likely go to a significant new all-time high. The fact that it could hold, it's the fact that it held the low in a Bitcoin USD downtrend, right? Because like if you were to overlay Bitcoin USD on here, Bitcoin was going down, right? But ADA Bitcoin was holding its low. That's what you look for. And then ADA went up 3 times the prior all-time high. Now look at an example where that didn't happen. That's what you look for. Look at an altcoin that did not make a new all-time high on its USD pair. Dash is something that I've talked about recently. It's a great one to sort of look at. This is Relic from a prior cycle. I'm assuming a lot of people watching this might not even know what Dash is because they maybe joined over here in 2020 or 2021. But look at this peak in 2017. And then look at the peak in 2021, right? Now, you could have known ahead of time that Dash was likely not going to take out its prior all-time high. And the way you could have known that is just go look at the Dash Bitcoin pair. And you can see that in 2019 and 2020, there was never a period where it was holding its prior lows, right? It was always just going to a new low. And what that signaled was that it was a higher risk asset and it could never find any capital to support its valuation against a lower risk asset. And so that told me that, this coin is not as interesting. Another one that I was interested in last cycle, and I have plenty of videos on my channel talking about it, was Link Bitcoin, right? Like Link Bitcoin was putting in higher lows in the pre-halving year and even in the bear market year, right? It was putting in higher lows. And then what happened with Link USD in the bull market, in the Bitcoin bull market, right? It just went parabolic to much higher prices. So I think what you look for is because I can't talk about, all 10,000 different altcoins that exist. People ask me about, right? But if you have an altcoin and you're curious, what is the likelihood of it putting in a significant new all-time high and not maybe just like a double top, right? Because there's an example of like Litecoin and Monero where like Litecoin Bitcoin just continues to bleed over the macro scale, but we know that Litecoin USD, put in a double top more or less from 2017 and then 2021. So look at their Bitcoin pairs. Collectively, you can look at the entire market of altcoins by looking at total 3 minus USDT over Bitcoin. And you can see that it held the lows. And then we got this capitulation. This is like a Wyckoff accumulation type thing, right? You get a low, another low, and then you get sort of that final low, and then you rocket out of it. So I would be looking for the altcoin market to drop down here to find support around that level. And when it finds support, figure out what altcoins are allowing it to find support, because a lot of them won't. A lot of them will just bleed forever. Dash Bitcoin was the example I just showed, but you could look at like 5,000 other altcoins that do the exact same thing. So look to see which ones hold the low. And then the other thing is you want to see the Bitcoin dominance at 60%. right? And this is a funny little thing I put on here because I don't know if anyone's following this. I saw someone comment on it in the chat, so I feel compelled to at least mention it. Is that the dominance of Bitcoin right now has actually gone down somewhat recently, back down to 50%. But the reason it's dropping is not because altcoins have been going up. It's just because the trading view calculation for total 3 has been changing. And so they've been adding new coins to total 3, which is making it so the Bitcoin dominance is gapping down. And you can actually see this if you look at like I don't know, I don't often do this, right? But look at a minute time frame on total 3. Like you can see here how it just sort of gapped up by $3 billion in 1 minute. But it's been doing the exact same thing, right? It did it over here as well. Yesterday, they added 4 billion in 1 minute. And what happened was a few days ago, they added 17 billion in 1 minute. And I got pretty pissed off. So they rolled that back. And now they're incrementally doing it, right? So they're basically trying to add new coins without significantly affecting the chart. Okay. And the way you do it is you just add a few coins, every day or so. So it doesn't really make a huge impact. But if you look closely, you can see that they've been adding new coins to the definition of total 3. Therefore, the Bitcoin dominance has been gapping down whenever they add these new coins. But even with that, I mean, I would still expect Bitcoin dominance to go to 60%. And if we're being honest, I mean, the dominance including stables is actually at 49%. Okay, it's not at 50%. If you go to CoinMarketCap, you can see up here the dominance including stables is at 49. If you go to to my own website, you'll find that it's at 49%. So I don't know if they're going to keep adding it until it matches what you see on CoinMarketCap, or if they're going to just do it for a couple more days. But I would keep an eye on that. But general expectation: look for altcoins to bottom out against Bitcoin. Look for the Bitcoin dominance around 60%, and also look for that sweet liquidity to come back to the cryptoverse.
Yes, liquidity as well, of course. Yeah. Good stuff, Ben. Good stuff. Comprehensive. Rob, kind of same question to you. What are you going to be looking for in these alts that you're buying? And obviously, as I said, kind of caveat that by the fact that you're already DCAing, and you have been DCAing for a while, I think. Is that fair to say?
Rob, you're muted.
Yeah.
Sorry, I muted myself. Yeah, I've been doing this for quite some time because I don't know. Like, I mean, the things that Ben talk about and the things that Guy on your channel you talk about, it makes total sense, because especially if we go into like a recession, which we're pretty much not guaranteeing, but it's looking very, very relevant. It's actually going to happen. But I just look at it, I go, I don't know what's going to happen in the markets. Like when I know things, I think that I know things. It just does the exact opposite. So I dollar cost average. I don't lump sum, and that's it. But Ben, do me a favor, throw up that dash chart again, could you? Dash, this is this thing that I talk on my channel. And if we talk about like the digital assets that you're getting into, I always say, dollar cost average, you can lump sum all this stuff. We did a video yesterday, but I always say it's a dash of salt. Always remember dash of salt. And dash is one of those things where, and someone had a good point. They said, these different projects that you think are going to hit their all-time high again, there's things like dash, there's things like salt that never will. And the reason is because on the previous cycle, the problem is that people are such bag holders that they got into so heavy and they foam it in so hard that at some point they got to dump everything. So actually what I'm looking at moving forward is some of the newer projects. Because in the last cycle that we had, which was one of our biggest gainers, Solana, came out of nowhere, right? And the reason was because there wasn't a ton of bag holders from the last cycle. Now, if we talk about VC, that's totally different. And that's could be where it's actually happened. But moving forward, I'm starting to look at some other projects that could be the next big, and I think L2s are going to be quite large. So I look at Arbitrum, I look at Optimism, and of course, my big thing is crypto and blockchain gaming. So going forward, like I know, Guy, you're not touching it because you're not doing anything because you're just like waiting. Ben is, I don't know, Ben, if you're even buying Bitcoin now, but not altcoins for sure. And I look to myself and say, well, you know what? It could go down, and if it goes down even more, great, I dynamic DCA. And I just start buying on the way down, and then I wait till the big show in 2024, 2025. And maybe I'm wrong on that one too, and I have to wait till 2026. It's okay, I got time. So for me, it's just one of those things where I'm just like, I just put my hands up and go, this is my plan. This is what I put together 2 or 3 years ago. I'll stick with my plan. Go from there.
To reiterate what Rob just said, like that does normally work out. right? I mean, it normally does.
Yeah.
Okay. So, I mean, if you're waiting on something, just know that the Rob strategy does tend to work out in the long haul. It's just if you do that strategy, make sure that like Bitcoin is part of that strategy, because so many of the altcoins that you might DCA might never actually come back, right? Like there's some survivorship bias, right? Like it's easy to look back now and say, well, if you had bought the altcoin in 2019, it would have gone up 100x, right? But for every altcoin that went up 100x, there's probably like 100 more that just went to zero. So just remember that if you are going to do that strategy, which is completely fine, and I mean, I DCA Bitcoin, I did it a lot last year myself. But if you're going to do it, then just remember to include Bitcoin in it and not, exclude it just because you think that altcoins are the only thing that are ever going to go up.
Well said. Thank you. And my Bitcoin's still 75% of my portfolio because it's the safest one in the most volatile market. So we'll go from there. And I'm going to have some losers. That's okay. I just need the other ones to do pretty well.
Yeah. And I know for people watching as well, and I think I talked about this at the beginning of the stream as well. It's tempting at the moment because you do see certain coins and tokens pump even at times like this, and I think it can be really, really tempting to sort of to kind of read that narrative wrong, or kind of ape into some of those in the expectation of of getting on that pump. So all I'll say is, if you're seeing something like this pump a crazy amount, if you're hearing about it after it's pumped, it's probably a little too late. So right. I would urge caution. And the other thing that struck me as well, there's a couple of things that have been on my mind a bit recently regarding kind of investing in crypto and altcoins in general. And I think one of the ones that I think serves as a really good reminder is sometimes doing nothing is the best, or put it this way, boredom can be your biggest enemy at times like this. I think it might have been one of the Bankless guys was talking about that the other day, just going, look, the temptation at times like this to just do something can be kind of overwhelming. So I think people need to be wary of that. People sometimes, a lot of the time, doing nothing is probably the best strategy, and I think that could be a good strategy to look at times like this. Okay, we've had there's a few questions that people have been putting in the comments. So we've got a few minutes left. Have you guys got time to answer a couple of viewer questions?
Oh, yeah, of course.
Cool. Okay, this is an interesting one from Andy B. I previously heard you guys talking about diversifying your portfolios. When you mention precious metals like gold, do you buy physical gold ETF, gold-backed crypto 1-to-1, or something else? Rob, I know you're a big man for diversification.
Yeah.
Do you buy any gold? Have you got any gold? If so, yep. What type?
My brother is the big gold bug, and he thinks I'm ridiculous for into crypto. He says that you got to just buy gold and silver. That's all you need. But for me, I just get it through iTrust because it's actual physical gold, and it's stored in the Canadian gold repository. So I trust with those guys, and I just buy it, and it's in my Roth IRA. So when I turn 59 and a half, not too far away, then I can take those out tax-free. If I want to.
Ben, how about you?
I think I've done all of those at some point or another. Like everything listed down there. I'd say the general advice that when I was getting into it, if what I sort of consider to be the right solution, if it's a small amount, like doing the ETF approach is okay. Although there's going to be a lot of people that would like very much disagree with that view, right? It's sort of like the Bitcoin view, like not your keys, not your crypto, right? So if it's kind of like the same thing with gold, right? Like if you don't actually have the physical gold in your possession, it's not necessarily serving the purpose that you think it is, right? So you could make the case that the people that say not your keys, not your crypto, there's a whole class of those people in the precious metal market that also exists. So the idea of not owning the actual underlying asset with precious metals is just absolutely insane for a lot of people. So I would say if it's a small amount, you could probably get away with just doing like an ETF or something. the larger amounts you go, and of course, when I say larger or smaller, it's going to be dependent on everyone's own, how much they have in the market, right? Like there's not a right or wrong answer, but I'd say the larger position that you want in it, it would be more ideal to actually get the underlying asset rather than the ETF. Because you also have to remember too that when you go through the ETF approach, there's going to be like a fee, right? So you're losing some of those gains just off the top, just so you don't have to go through the hassle of buying. It's like if Bitcoin spot ETF were approved. I mean, I imagine a lot of us would never go buy that because you don't own the underlying asset, and also they're going to take a fee off the top. And we all are pretty well versed in how to buy Bitcoin, and how to store it. But for the new people that are not, they would, of course, they might go into the spot ETF.
Yeah. In my experience, I mean, I don't have any particular gold exposure. Although back when I was in the UK and I had an ISA, an independent savings account, a stocks and shares ISA, I did have some gold exposure. I found a way I liked was getting exposure to actual gold miners, to gold mining stocks, which in some cases paid quite a nice dividend. And I was always a bit of a fiend for dividends. They're quite risky stocks, as I remember, because they're subject to all sorts of acts of God and freaks of nature and stuff like that. But yeah, that was the only gold exposure I've ever had through actual gold mining stocks, which did, as I say, have the benefit of a juicy dividend every so often. So obviously, as you guys have pointed out, there's and as Andy points out, there are quite a few ways to own gold. But yeah, I think you're right, Ben. This idea of not owning the underlying asset is a really important one. It's like you own some gold bars stored in a bank vault somewhere. There's going to be all kinds of you can imagine all kinds of problems getting your hands on those if things really go south, if the balloon goes up, so to speak. So yeah, but then I guess what use is it going to be? Do you want the hassle of storing huge amounts of gold yourself? It's a tricky one, which is why and again, I think that was one of the things that made Bitcoin why Bitcoin made so much sense to me. Early on, it was like, yes, here is a way of doing it, and that narrative has obviously got stronger as Bitcoin's prices has gone up and up. Okay, let's just see if there are someone helpfully pointing out that TradingView had been ruining your Bitcoin dominance chart, Ben. Lots of people with sympathy out there for you.
No, but now but now when the dominance is 60%, I can say it did so even when they changed the definition.
Absolutely. Now there was something. There was a question I saw here. Oh yes, here we are from John. So John says, question: the central banks next year can use deposits 2% for crypto. Will this be bullish for the market? I just want to clarify that a little bit. So from 1st of January 2025, central banks will be able to hold Bitcoin crypto on their balance sheets. Now, yes, I mean, I guess on the face of it, that will be a bullish thing for the crypto market. So, John, I hope you don't mind if I take a little bit of liberty with your question and just rephrase that. Do you, Rob, Ben, do you think this is something, this date in 2025, do you think that's something that really could supercharge the market? Obviously, given the timing of it, 2025 is when we expect to be, that next phase of the cycle to be underway. Is that something that you guys have been thinking about very much? Is it something that you think could have a big effect? Rob, let's start with you.
Are we talking about America or the rest of the world? Because in America,
central banks in general.
So central banks in general, like the thing is that they can do it, they could do it. The question is, will they do it? And I don't really have an opinion one way or the other. It would be smart for them to do it, especially with the debasement of all currencies around the world, for them just to put it in there, especially just 2%. But will they do it? I think it would be a smart move for them. But again, that's just us looking at it from the outside in. They may look at it and say, why would we do this? This is nothing for us, and move forward. But I don't really see it as like a monstrous move. I think it'll be a good narrative moving forward for the people to say, well, a central bank is holding it. And that could be any central bank out there. we could probably say that. And then, of course, the narrative moves it forward and people will buy more. Sure.
Ben, what about you? Is this something that you've thought about much? Do you think it could be something we could get realistically excited about?
Maybe at some point. I mean, it's hard to imagine the US doing that in the next 2 years, I mean, maybe like 2 or 3 cycles from now. I mean, perhaps you'll see it occur with a central bank. I don't know. I mean, hell, last cycle we had a country, right, buying, I mean, like every cycle it seems like there is at least some way that adoption has grown to a larger level than what we previously were looking at. So yeah, I suppose it's possible. I mean, I don't know that it's going to move the needle on the market. I mean, El Salvador buying Bitcoin didn't really seem to change much of anything. So I mean, I guess if it probably depends on when it occurs. I mean, like if it occurs in like early 2025, then maybe it would be viewed as bullish. What happens if it occurs like later on in the year? Then it could end up being one of those like sell the news events, right? Where you buy into it, and then it probably depends on when it happens. But my guess is for I mean, for at least here in the United States, I don't really see it being a realistic outcome in this next cycle.
It certainly would be satisfying in a way to be able to dump on central banks, wouldn't it?
It would be nice, but I don't think it's gonna. I mean, as long as Gary Gensler is here, I don't see too much positive traction for crypto.
Yeah, I think you guys are right. It's I did see speculation. I don't know whether there was any truth to it, but I did see speculation somewhere that Hester Peirce might be lining up to take Gary's place at the SEC. I didn't manage to look and see if that had been verified, but of course, I think there is talk that Gary's got his eyes on Janet Yellen's job at the Treasury. So who knows, guys? Who knows? We could be in. It could all turn on a dime if Gary moves on, and Hester Peirce is very pro crypto, has been a voice of reason at the SEC. So perhaps that's a white swan on the horizon. Just before we go, I'll wrap it up in a couple of minutes, but I mean, there are a couple of really burning questions here. Oh yes, I should also mention as well, anyone interested in going to Token 2049? I don't know if either of you guys are planning on attending that, folks, but I'm going to Token 2049 in Singapore, sort of in the middle of next month, 13th to the 14th of September. So if anyone watching is keen on going to that, we do have some discounted tickets available. And if you are going, please let me know. It'd be lovely to bump into you there. I want to ask a couple of burning questions of you now. Ben, this is one that I think everyone needs to know the answer to. Do you flat pack your cardboard desk and take it on holiday with you?
Of course not. No.
That's definitely a yes in that respect. And a question for me here. This has been preoccupying people in the comments a great deal. Is Guy trying to make Rob jealous with his dark brown beard? Lots of people speculating that I might have dyed it. I'd like to just clarify that I haven't dyed it. It's just a bit thicker than normal. And yes, I am trying to make Rob jealous. And hey, I think it's probably working.
It's probably working. I had to earn all these gray hairs, so I'll stick with them.
I think
I've still got
gray hairs.
They're coming.
What's that, Ben?
They're coming.
I said I think crypto is going to give all of us enough gray hairs.
Mm-hmm.
Yeah. By the end of this bear market, we'll all look like Santa Claus. I just want to close out, Ben. You'll have to grow a beard first, but I just want to close out with a question regarding storage. How do you store your Bitcoin? Hello, love your show. Thank you, Eric. How do you store your Bitcoin? I'm looking for another way to store mine after the Ledger issue. Love to get some good advice from you all. So I'm just curious on that note, chaps. How do you store it? What do you use? What do you guys swear by? Rob?
Well, I use a Ledger, but I also diversify because you never know. So I used Elipal. I did a video on that one, and I just got the Tangem wallet yesterday. And Tangem's pretty interesting because it's just a card, and your private key is located within the card itself. So they give you 3 cards, And it's just like your piece of paper that you write down your nano ledger. If you lose the mnemonic phrase, well, you're screwed if you lose the ledger as well. But with this one, it's 3, like they look like just like regular credit cards. There's an app on your phone, you put it there, and then it's air gap. So the card just kind of stays like that. I'll do a review, but they're out of Switzerland or Sweden, and they seem to have been in the cryptography space for quite some time. So that's the other one I'm using starting today.
Okay, I haven't heard of that one. Yeah, I'll have to keep a lookout for that video, Rob, for that video review. Ben, what about you? What are you using to store your Bitcoin?
Yeah, I mean, I'm not going to promote any individual one, but I would say in general, I think what Rob is doing is the good idea. Like you mix it up, not a centralized exchange for sure. That's the key thing. If you ever have a crypto on an exchange, and I've used this metaphor before, like use it like a public restroom. Get in, do your business, and get out. You don't want to keep it there. You don't want to stay there for longer than you have to. So I wouldn't keep it there, but I mean a mixture of other wallet addresses that you own the private keys to, I think is the way to go.
Yeah, 100%. It's never it never doesn't pay to mention that, does it? Because for every person who that message gets through to is a win. So yeah, don't store it on a centralized exchange, whatever you choose to do. I personally use a Trezor, and I have used for a very long time. I've also used one of those Engrave zeros, this one with a sort of camera, which is you get a kind of punch card for the seed phrase for the private key. So it's there's lots of ways to do it. Obviously people got a bit spooked with the kind of ledger thing, but the main thing is make sure that you use a hardware wallet. You won't regret it. Okay. Folks, we're pretty much out of time there. So thank you everyone for watching today. Thank you for tuning in. Ben, Rob, thank you very much, gentlemen. We will be back, I think, next week, hopefully, after our hiatus last week. I'm not sure who's hosting. Can you?
My channel
will be on Ben's channel.
Mm-hmm.
Okay, so that will be next week. I think we'll be back at the normal time, so it'll be 9 a.m. Eastern time next week on Ben's channel, Into the Cryptoverse. If you haven't already, make sure you follow both Ben and Rob, and we will see you all again next week.
See ya.
See everybody.
Thanks, everyone. See ya.